Thank you, Rocco. Hi, everyone. Welcome to our second quarter 2025 earnings conference call. The company's results were issued via Newswire services earlier today and are posted online. You can download the earnings release and sign up for the company's email alerts by visiting the IR section of our website at ir.finvgroup.com. Mr. Tiezheng Li, our Chief Executive Officer, and Mr. Jiayuan Xu, our Chief Financial Officer, will start the call with their prepared remarks and conclude with a Q&A section. During this call, we will be referring to several non-GAAP financial measures to review and assess our operating performance. These non-GAAP financial measures are not intended to be considered in isolation or as a substitute for the financial information prepared and presented in accordance with U.S. GAAP. For information about these non-GAAP measures and the reconciliation of GAAP measures, please refer to our earnings press release. Before we continue, please note that today's discussion will contain forward-looking statements made under the Safe Harbor provision of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, the company's results may be materially different from the views expressed today. Further information regarding these and other risks and uncertainties are included in the company's filings with the U.S. Securities and Exchange Commission. The company does not assume any obligation to update any forward-looking statements except as required under applicable laws. Finally, we posted a presentation on our IR website providing further details of our results for the quarter. I will now turn the call over to our CEO, Mr. Tiezheng Li. Tiezheng, please go ahead.
Thanks, Yan. Hello, everyone. Welcome to our earnings call. Following a solid first quarter of 2025, I'm pleased to share that FinVolution sustained its healthy momentum in the second quarter. Supported by our robust growth in our international business and steady performance in China, net revenue reached 3.6 billion RMB, up 13% year-over-year, driven by a 10% increase in transaction volume in China and a 39% surge in international transaction volume. Net income also showed solid growth, reaching 751 million RMB, representing an increase of 36% year-over-year and 2% quarter-over-quarter. Since our transition to institutional funding model in 2021, we have now delivered 18 consecutive quarters of year-over-year growth in both transaction volume and revenue. A strong testament to our resilient business fundamentals in today's fast-changing macro landscape. As discussed in last quarter's earnings call, regulation in China's consumer finance sector have been evolving. With the implementation of the new regulation of the Internet loan facilitation business in October, we believe it may have implication to the loan mix and the risk profile of the assets in the industry, and we are closely monitoring the latest developments and the dynamics of the sector. We maintain active dialogue with our funding partners, which expanded from 114 to 119 in the second quarter, to maintain relatively stable funding supply and prepare in advance for the potential impacts on our transaction volumes and risk metrics. Our risk infrastructure, tested across multiple economic and regulatory cycles, positions us well to adapt swiftly and effectively to these changes. In the long run, we view that these measures will ultimately foster more sustainable growth across the sector and benefit the lending platform like ours. Part of our resilient business hinged on the international operations, which offer valuable diversification benefit and growth. In the second quarter, international transaction volume increased 39% year-over-year to 3.2 billion RMB, and loan balance rose 50% to 2.1 billion RMB. Notably, our international operations contribute 22% of net revenue, up from 18% in the same period last year. Underpinning the growth is our expanding customer base. We onboarded 1.6 million new borrowers during the second quarter, a 96% year-over-year increase. This marked our fourth consecutive quarter surpassing 1 million new borrowers. Thanks to our effective AI-powered marketing strategy and the diverse user acquisition channels in China, the transaction volume from new borrowers reached 7.1 billion RMB, up 20% year-over-year in our international markets. We attached 1.1 million new borrowers, up 126% year-over-year. New borrower growth from our international markets also outpaced that in China for the fifth consecutive quarter. Fueled by a diversified service we provide in the ecosystem through partnership with leading e-commerce and technology platforms, we expect this trend to continue. On the technology front, we continue to leverage AI in our risk management. We have built effective defenses against sophisticated AI fraud like deepfakes, achieving 98.8% detection accuracy. Our proprietary visual AI analyzes background patterns, document authenticity, and text-level anomalies, resulting in 95% detection of digital artifacts in forged images. We combine this with multi-layered verification, including dynamic facial recognition, randomized voice checks, and real-time video authentication. Looking ahead, we are evolving from single-mode to multi-mode detection that simultaneously analyze video and audio, keeping us ahead against the evolving financial fraud. ESG remains core to our long-term strategy. We published our 7th annual ESG report in July, underscoring our unwavering commitment to sustainable inclusive financial. Throughout 2024, we made substantial progress by combining technology innovation, process improvements, and ecosystem partnerships, particularly in enhancing our anti-fraud capabilities and optimizing service quality. These efforts have meaningful advanced consumer protection, with our intelligent fraud prevention system now detecting over 7,000 suspicious activities daily. In 2024, we've blocked more than 26,000 fraud attempts, protecting financial institutions from potential losses over 300 million RMB, while maintaining 98% user satisfaction rate. Also worth noting, FinVolution Group secured 2 prestigious honors at the Financial Asia 2025 Award in June, the Best Strategic Initiatives Award for the Philippines, as well as the Most Innovative Use of Technology Award for mainland China. This recognition affirms the positive value our fintech solutions has brought to financial institutions across multiple markets. Finally, an update on our capital market activity. We completed a $150 million convertible bonds offering in June, the first capital market transaction since our IPO in 2017. The funding will support our strategic priorities, accelerating international expansion and lowering capital costs. The transaction also helped us diversify our investor base, and deepen engagement with a broader group of investors. We are encouraged by the positive reception from the convertible bonds investors, as well as the improvements in our stock's liquidity following the transaction. In summary, our second quarter performance reflects outstanding execution of our local excellence global outlook strategy. We are encouraged by the resilience of our China business and the strength of our international business, bolstered by ongoing investment in technology, customer acquisition, and international expansion. We are well positioned to continue driving sustainable growth and delivering long-term value. Now, I will hand the call over to our CFO, Jiayuan Xu, for a closer look at our financials.
Thank you, Tietzhen. Hello, everyone. Let me go through our key results for the second quarter. I will begin with our performance in China. Despite global trade tension and macro uncertainty, China's economy demonstrated resilience that GDP expanded 5.12% year-over-year, exceeding market expectations. Also, consumer sentiment improved on the back of a 4.8% increase in overall spending in June. It is encouraging to see continued regulatory support to increase credit supply for consumer finance to boost the economy. Against this background, we delivered solid results in China. Our take rate remained stable at 3.4%, while the average loan tenure extended slightly to 8.3 months. Risk metrics stayed broadly stable, with day one delinquency rate rising 10 basis points quarter-over-quarter to 4.7%, while 13-day collection rate remaining steady at 89%. We maintained our prudent approach to provision, supported by a healthy provision coverage ratio of 543%. Turning to our international business, we drove continued growth despite the spillover impact from Ramadan in early Q2. Domestic macro indicators in our key Southeast Asian markets were largely stable, while the underlying consumer demand for credit remained strong. Total international transaction volume grew 39% year-over-year and 6% quarter-over-quarter, surpassing RMB 3 billion for the second consecutive quarter, while outstanding loan balance rose to RMB 2.1 billion, up 50% year-over-year and 13% sequentially. Unique borrowers soared by an impressive 122% year-over-year to reach 2.3 million, breaking the 2 million mark for the first time. As a result, revenue from international markets increased to 797 million, up 42% year-over-year. In Indonesia, while macroeconomic conditions showed slightly moderation amid tariff tensions, our business demonstrated strong resilience. We maintained the momentum by offering longer tenure products to high credit quality borrowers, which drove better asset quality and an improving take rate. We also continue to expand partnership with local platforms to acquire new borrowers. These initiatives delivered solid results. Loan volume grew 9% year-over-year, with outstanding loan balance increasing 25% to 1.3 billion. One important and encouraging update on Indonesia: at the end of July, the OJK, Indonesia's Financial Service Authority, issued a new circular that keeps the daily fee cap for consumer funding unchanged from its 2024 level. This is a welcome development because it effectively replaced the previous policy, which would have required a 0.1% annual reduction in the fee cap through 2026. This decision provides much-needed stability. It addresses concerns that further fee cuts could pressure revenue and profitability, and it ensures a healthy, more sustainable environment for business going forward. We see this as a strong vote of confidence in the industry and a positive step for our long-term goals in Indonesia. Our business in the Philippines continued to outperform this quarter. Business activity in the Philippines remained high nationwide, with an average PMI of 50.7. Thanks to ongoing regulatory support for digital finance innovation, as well as our brand awareness through effective marketing strategy, our loan volume more than doubled year-over-year to 1.4 billion, accounting for 45% of our international business. Buy now, pay later products contributed 32% of volume, up from 30% in the same period of last year, driven by our collaboration with TikTok Shop and efforts to expand new platform partnerships. Moving forward, we are optimistic over the transaction volume growth in the Philippines as we deepen our market presence, broaden our funding partnerships, and diversify our business offerings to capture emerging opportunities. Overall, our strong operational performance this quarter produced impressive financial results across the board. Net revenue reached 3.6 billion, reflecting robust year-over-year growth of 30% and a sequential increase of 3%. Net income also saw significant momentum, rising 36% year-over-year to 751 million, underscoring our ability to drive profitable growth. Our financial position remains solid, with 7.9 billion in cash and short-term investments, providing ample liquidity to support our strategic priorities. We continue to maintain a prudent balance sheet with a leverage ratio of 2.6 times, defined as risk-bearing loans to shareholders' equity. Finally, we continued returning capital to shareholders and have repurchased $63.8 million of shares in the first half of 2025, including repurchase made in conjunction with the convertible bond issuance in June. The CB proceeds to fund our international business will optimize capital costs and accelerate expansion. In short, we maintain our strong growth trajectory through disciplined execution of our local excellence and global outlook strategy. We remain confident in our ability to adapt quickly to the evolving regulatory environment in China, while driving growth in untapped international markets. We believe the new regulation may foster a healthy development of the industry and benefit leading players' market share in the long term. As such, we are reiterating our full year 2025 revenue guidance of 14.4 to 15 billion, or 10% to 15% year-over-year growth. With that, I will now open the call for questions. Operator, please continue.
Thank you. If you would like to ask a question, please press star then one on your telephone keypad. If your question has been addressed and you'd like to remove yourself from queue, please press star then two. For the benefit of all participants on today's call, if you wish to ask your question to management in Chinese, we ask that you please kindly repeat your question in English. Today's first question comes from Cindy Wang with China Renaissance. Please go ahead.
谢谢管理层给我这个提问的机会，也恭喜公司在第二季有一个不错的表现。那我这边有两个问题想请问，第一个是我们怎么看这个助贷新规对整体业务在下半年的一个影响？那新放贷款量是否在下半年可能会放缓来调整这个贷款结构，以及确保这个资产的一个质量？ 那第二个问题是海外市场。那第二季度我们看到整体的一个放贷量仍维持一个高速的一个增长。那目前不知道7月、8月这个整体的一个放贷的状况是如何？那在下半年来看的话，整体放贷人群结构在印尼和菲律宾是否会有什么改变吗？那我很快的翻译一下我的问题。Thanks for taking my question, and congrats for the good result in second quarter. So I have two questions here. First, regarding new regulation on loan facilitation in China, how do you see the impact to your business? Would you slow down new loan volume in second half to adjust loan structure and ensure asset quality? Second, the new loan volume in international market in second quarter maintain rapid growth. What is the current run rate in July and August? And is there any target customer profile change in Indonesia and Philippines in second half? Thank you.
Okay, thanks, Cindy. Yeah, I will take your questions. Your first question is about the new regulation in China. The new regulations on internet loan facilitation business will come into effect in October 1st. We think it will provide more order to the industry and in the long run promote the consolidation. There might be some impact on the different types of the assets right now. As for those high priced assets, the funding supply has reduced. And the funding partners now become more cautious and selective on the cooperation with the platforms. They like to choose the platform which can bring the good economics or have the manageable risk reward. And for those high quality assets where our core business is, liquidity and the funding costs remain stable. The tightening of the industry liquidity has introduced some challenges, but the overall impact to us remains manageable for three reasons. First, we have the know-how for acquiring and operating the high quality assets. We have long been focusing on the sourcing and the pricing high quality assets from the information feed channel. Now the funding market shifts to the high quality assets, we should benefit. And the second, as proven in the previous credit cycle, we have been disciplined on risk management. Thanks to the efforts on the high quality customer strategy and the continuously build the competitive capabilities, we saw the delinquency rate staying at a reasonable and manageable range. We will continue to dynamically balance the risk exposure and the transaction volume as we step into the second half year. So we expect maybe the regulatory uncertainty will continue to weigh on the industry. And the third, our international business can continue to be a growth driver and more important a source of our diversification to our business. In the second quarter, its transaction volume increased by around 14% year over year, and the revenue contribution surpassed 22%. We also see a better profitability trajectory than expected in our international markets. This structural growing trend in international markets provide a cushion to the short-term volatility in China market. So in conclusion, we expect maybe a low single-digit quarter-over-quarter decline in the transaction volume in the China market. It with reasonable fluctuation in risk levels and largely stable take rate. So we are maintaining our full-year revenue growth guidance of 10 to 15%, subject to the industry not significantly different in the coming quarters. And your second question is about our overseas business. Well, as we mentioned in the first half of 2025, our international markets continue its very strong momentum. The transaction volumes was up nearly 40% year-over-year and 11% quarter-over-quarter. And I'm very happy to share that this strong trend here is steady right into the July and August. Based on our current trend, we are projecting both Indonesia and the Philippines to deliver the solid double-digit quarterly growth again in Q3. As for the Indonesia, the most important update is on regulation. In the later July, the OJK confirmed that it's a new interest rate policy. It will effectively maintain the interest rate cap as if which we have been operating and since the end of last year. The directive issued in 2023 was to reduce the interest rate cap gradually from 0.4% to 0.1% in 2026. With the later circular, the reduction is not revoked. This removal of the uncertainty is a huge positive for the entire industry and allows us to plan for the long term with much greater clarity. And in terms of the business, we are continuing to deliver the diversified product offerings. As for our online cash loan, we proactively launched the marketing initiatives to go after better quality customers in the first half year. For example, we offered attractive terms and the repayment flexibility to those high quality customers to appeal to customer base we are able to reach. And for the offline front, we have acquired the multi-finance license last year. We are expanding into the offline installment scenarios like the smartphones, motorbikes, and the home appliance. We have partnered with the major Chinese electronic brands and the local brands to offer offline installment loan options at the point of sale. But this business is still relatively small at the moment. We are quite confident it could be a market of very substantial potential. And for the Philippines, it's our second largest overseas market. It has been consistently exceeding our expectations and the micro environment remains very favorable. For our Buy Now Pay Later cooperation with the TikTok Shop, it continued to be a very huge success. It's already contributed to 32% of Philippines' total transaction volume, and its product lines has already become profitable. Building on this success, we have recently expanded partnerships with other local telecom operators to fund phone credits with Buy Now Pay Later products. So with these partnerships, we aim to onboard a new customer base that we haven't served before. Looking forward, we continue to expand and diversify the consumption scenarios and the partners' ecosystems to build a financial product matrix that covers the wider user base to speed up the overseas business growth. So look ahead to the second half year. Although the Philippines might experience some typhoon-related seasonal impact in Q3, we will stay prudent in our customer acquisition strategies. But given the powerful momentum from our ecosystem partners and our expanding product offerings, we are very confident in maintaining the growth trajectory for the full year. Okay, thank you, Cindy.
Thank you. Very clear.
Thank you. And our next question today comes from Alex Yi with UBS. Please go ahead.
好，感谢管理层给我这个提问的机会。我这个第一个问题想请教一下关于资产质量这一块，想请教一下这个C-to-M ratio 可能在一个可能二季度我们主要看到这个可能是 Day One 有一些上升，可不可以给我们介绍一下这个主要的一个原因，然后以及这个7、8月以来这个趋势是怎么样的，然后可能对于一个接下来3季度、4季度的一个展望，是否会担心这个行业的这个助贷新规对我们这一块的 比较20以下定价客户也会有一定传导的一个影响。第二个问题讲关于海外业务这一块，可能关于说这个年初至今吧，咱们在这一块的增速啊，以及资产质量等方面，跟你们可能年初的这个预算上，有什么差异吗？然后以及说，前2个月发行的这个 CB，对于今年整个海外业务的一个增速发展，是不是会有一个加速的一个可能性？然后是不是会比原来想的还要增长来的快一些？ So I'll translate for my question. First question is about the asset quality. So can you give us more color on the drivers for the Q-on-Q movement into your day one delinquency ratio and collection ratio? And how has been the trend you have seen in the July and August? So are you concerned about the potential spillover risk for your core customer base from the current regulatory uncertainty? Second question is about your overseas business. Can you walk us through how has been the development of your overseas business compared to a plan in the beginning of the year? In particular, given you have issued an CB earlier, so how has that expected to be contribute to your overseas growth in the coming quarters? Should we expect the overseas growth to further accelerate from here? Thank you.
Okay, thanks, Alex. Yeah, let me take your questions. Your first question is about the domestic business again. So let's get back to the domestic business. Well, overall risk level was largely in check in Q2, although we observed a moderate uptrend in the July and August. We started to see the early spillover of the risk from 36% asset to 24% assets, but it remained under control as we preemptively managed the loan portfolio. In Q2, our key risk metrics remained largely stable, as we mentioned. It also factoring the slightly long tenure of the portfolio in the quarter. The day one delinquency rate held steady at 4.7%. Our 30-day loan collection rate remained strong at 89%. The vintage delinquency rate was 2.5%. In July, we saw a bit of upward movement. Our day one delinquency rate ticked up slightly by 20 bps to 4.9%. We moved quickly to adjust our risk management strategies, and by August, the day one delinquency rate had stabilized at 4.9% level. And our 30-day loan collection rate held firm at around 89%. And in view of the uptrend of risk, we have proactively tightened our risk management in the following aspects. First, we reduce our exposure to the assets from those low-quality channels, which historically carries the high risk. And for those high-quality channels, maybe the information feed channel, we further adopt different credit strategy for our borrowers. For example, we reduce the credit limit to borrowers of the higher debt, offer the better terms to borrowers of better credit score, and remove the credit limit that are not utilized. And in terms of the loan collection, we employ the AI technology to identify and alert high-risk borrowers who are in the early stage of the past due, and set up the collection effort accordingly. So look ahead, while we continue to be vigilant on risk for Q3 and Q4, we also have a risk buffer in place. Our provision coverage ratio has climbed to 543%, up significantly from 465% in Q1. So we will remain flexibility and adapt to the market dynamics, We are confident to stay constructive over the long-term development of the industry and the position of the leading platforms. So that's for your first question. And your next question is about the overseas business and the impact of the convertible bonds. Well, regarding our international performance, as we mentioned, the first half of the year has played out very much as we expected. The transaction volume hit 6.2 billion, up 38% from the last year. The outstanding balance grew to 2.1 billion, a 50% increase, and the revenue reached 1.5 billion, up 30%, and now making up the 21% of the group's total revenue. The funding cost in international markets has held steady, and we have continued to deepen relationships with the more financial institutions. As we mentioned before, we have focused on attracting high-quality borrowers in Indonesia, where we have seen a 50% improvement in credit costs comparing to the start of the year. The credit cost in the Philippines has held steady. This is driven a steady improvement in our take rate. On top of that, the recent removal of the regulatory facility in Indonesia could normalize the liquidity and provide us the stable environment to execute the consistent customer acquisition and our risk pricing strategy go forward. And for our new market, such as Pakistan, after we get the NBFC license last year, we just recently secured a buy now pay later license in July. And it can make us the first the fintech platform that can operate both online and offline, representing a powerful endorsement from the regulators. Now, our plan is to roll out more diversified consumer finance product offerings to serve our customers throughout their life cycles. And finally, I want to touch on how we are funding these goals. Our $150 million convertible bond issuance in June was a strategic move. We used around $16 million for concurrent buyback, and the rest is gradually deployed to fund our international business. Our average overseas funding cost, it's about 12%, comparing to the 2.5% coupon from the CB. That's roughly 10% potential savings from the working capital management perspective. So on top of that, this CB funding gives us some more flexibility on funding cost when we engage with the local funding partners. All of this positive development, together with gradual use of the CB funding, led us to expect better profitability from our international business. We now expect the profit contribution from our international business of no less than $15 million this year, up from our prior estimate of $10 million. Okay, thank you, Alex.
Thank you. The next question comes from Dongping Zhou with CICC. Please go ahead.
好的，感谢管理层给的一个提问机会也非常恭喜公司二季度取得的一个亮眼业绩。然后我这边想要了解一下公司未来的一个股东回报的计划我注意到上半年咱们已经回购了这个大概6000万美元的一个股票。那考虑到年初发布的这个回购计划，想问一下管理层如何展望后续的一个回购进程。此外呢，公司此前已将本年度的一个分红比例提升到了20%到30%的这个区间。那当前是否有一个更加明确的一个分红比例的一个方案呢？ And let me translate. And I would like to inquire about the company's future shareholders returns progress. We noticed that the company has repurchased about $50 million in shares during the first half of this year. And I wonder if you could give me some color on the future progress of the repurchase. And in addition, the company's previously raised the year's dividend payout ratio to the range of 20% to 30%. Is there a more specific dividend ratio plan available for disclosure to the shareholder at present? And that's all. Thank you.
Okay, thanks, Dongping. I will take your question. Well, returning capital to our shareholders is always a very important strategy for us. We were the first in our industry to launch the capital return program back in 2018. And since then, our commitment has been substantial. We have cumulatively returned $813 million to our shareholders, representing around 35% of our current market cap. And regarding the two pillars of the return, the dividends and the buyback, first, as for the dividends, we are deeply committed to a growing dividend. Our DPS reached 0.277 for 2024, up a strong 70% year over year. That actually marks our fifth consecutive year of growth with an impressive 80% CAGR. And this year in March, our board approved a significant upgrade to our dividend policy, moving from a minimum of 10% of net profit to a new range of 20% to 30% annually. Given this enhanced policy and our performance, we will track the DPS growth rate to ensure a sustainable dividend growth strategy. Second, as for the share repurchase, we see the buybacks as a powerful and complementary tool. We had a $115 million buyback program in place until March 2027. In the first half of the year, we have repurchased $63.8 million, representing a 12% increase year over year. So we believe this new buyback and upgraded dividend policies send a clear message. We are committed to returning capital to our shareholders, and a sign of our confidence in sustained growth, profit potential, and expanding the international presence. Okay, thanks, Dongping.
This concludes our question and answer session. I would now like to turn the call back over to management for closing remarks.
All right, thank you. Thank you once again for joining us today. If you have any further questions, feel free to contact our team. Thank you again for joining.
The conference has now concluded. Thank you for your participation. You may now disconnect your lines.